Morning traders, I hope this finds you well. Just going to talk to you about a potential sell the rally opportunity for dollar CAD. This downward trending market, now making lower highs and lower lows, has, as the course of the week and the end of last week, been making a retracement, and as we've had the crossover of the 20, which has been previously respected as dynamic resistance, we're looking to potentially sell this rally as the market retraces. So we've got this bearish pin bar reversal here, day before yesterday, closing on Tuesday, and Wednesday we had an inside seller bar. What is interesting about this one as well is we had a lower high on the hourly formation as well, signifying a lack of momentum to the upside. So it looks like this retracement could potentially be coming to an end. Another clue as well is the fact that the previous 1, 2, 3, 4 days lows have not been breached. So if we place our orders with our entry below Tuesday's low of this bearish pin bar reversal and have our stop loss above the high of this bearish pin bar reversal, or if you wanted to be slightly more aggressive, you'd have your stop loss above the high of yesterday, Wednesday, in order to maximize that reward to risk potential. Remember, it's about a 2-to-1 reward to risk trade if we're targeting our first target, the previous swing low. It is a trade which is congruent with seasonality, because if we're shorting the US dollar against the Canadian dollar, it's essentially a long oil trade, because the Canadian economy is quite closely correlated to oil, and seasonality has it that from the middle of February all the way through to September, oil strengthens, and with that the Canadian dollar will strengthen historically with that, and this is the average over the past 20 years, and we're already long on oil. We've moved our stop loss to break even, so we've got nothing to lose from there, so we can potentially afford a little bit more exposure on dollar CAD, i.e. going long on oil, but through shorting US dollar versus the Canadian dollar. If we look how the Canadian dollar has fared historically over the past 20 years as well, looking at our friends at Equity Clock, we can see that towards the end of March, beginning of April, the Canadian dollar has strengthened also rather dramatically throughout April, May, plateaued in June, July, August, and had one last surge up in August before making its move all the way down again. So we've got the fundamentals backing this one up. So this is a simple sell the rally in a downward trend. I know we haven't had the crossover of the 50 past the 200. However, if we're looking at the fact that it's below the 200 moving average and we're making lower highs and lower lows, then it's quite a solid idea. The only thing I don't like about this trade is the fact we've got bullish reversal divergence here on the RSI setting 6, which is where we've got higher lows here on the RSI but lower lows here with price action. However, we can simply rebuff that by saying there are more factors in favor of this trade than there are against it. Okay, so that's dollar CAD.